When retirement researcher James Sandidge was working on his 2019 paper, Chaos and Retirement Income, he dove deeper into the impact of suffering losses when you're at a stage and you need your retirement nest egg to create income for you to live on in retirement. And he found even relatively small losses can absolutely wreck your retirement income plan. Hello, Kurt Jackson with KJ Financial with an absolutely terrifying example of how losing money in your retirement nest egg when it's generating income for you can put a huge damper on your retirement happiness. So Sandidge went back and he simulated two similar scenarios. He assumed in 1966 a retiree had $1 million, allocated the nest egg to a traditional 50-50 split of stocks and bonds, which we see a lot of when traditional financial advisors are designing retirement income plans. He assumed a 5% withdrawal rate, so starting at 50 grand a year. And then he also assumed 3% annual inflation rate. One retirement started at the beginning of 1966 and went for 26 years. The other one started at the beginning of 1967 and it went for 25 years. So these two scenarios shared the exact same investment returns for 25 of the 26 years that we're looking at. He discovered at the end of 26 years, the 1966 retirement had just $8,501 remaining, compared to at the end of 25 years, the 1967 retirement had $863,120 remaining. Now, we all know the 1966 retirement didn't take out more than $850,000 in its last year. So, what was the difference? Well, he called it the butterfly effect, where a small 2.9% loss in year one, so in 1966, can wreak havoc on a retirement. A measly 2.9% loss, thanks to the different rules for taking income out of your account than there is for the rules when you're building wealth, absolutely destroyed the 1966 retirement. Think about that for a minute. The annual returns were exactly the same except the return in 1966, and there was more than an $850,000 difference in ending wealth. So following the same or similar investment strategies that you've been using while you were trying to build wealth are all but designed to interrupt or even wreck retirement if you use those same strategies when you're trying to build income, take income in retirement. So how will you feel when you suffer a small loss in retirement? Will you feel you need to cut back spending? Will you be losing sleep over possibly outliving your money? Is that what you want from your retirement years? Are you ready to see where your retirement income plan stands? Are you ready to get your retirement success score? Are you ready to sample and see how our volatility buffer strategy is built to battle market losses during the creating income stage of retirement? If you're ready to do this, go to bookkurtnow.com, find the 30-minute discovery call option, and then book a time on my calendar when you're available for a 30-minute conversation. Now, come on, don't you owe it to your loved ones to do this? Don't you owe it to yourself to do this, to make sure that your retirement income plan is built to where you can fully enjoy your retirement without ever worrying about outliving your money? Thanks for tuning in today.